Hey guys, Stock Saturday, and it's a green week for most people, I would have thought, after a bit of a rough one last week. I am up 2.8%, about 9,000, underperforming the market, to be fair. The S&P has been up 5.6%, very nice week. It was sort of, as I say, a little bit rough and sort of finished in a low point at the end of last week. So yeah, no huge surprise there. And we've had sort of continued walk back on tariffs. It seems like US isn't in quite as strong a position as they initially thought. Tech is obviously loving this as well. Nasdaq up 7.82%, sort of strongly beating the S&P. And of course, my portfolio, about nearly 3 times the gain of my portfolio. Obviously, part of mine is down to gold, not having a tremendous week. Obviously, still way higher than just a sort of few months ago. So yeah, pretty happy with that. But yeah, underperforming this week. Not a huge amount of surprises in the portfolio. Sort of most of my tech stocks and sort of general smaller holdings doing okay broadly with the market. Some slightly worse, and then, as I say, most of the underperformance has come from the gold and silver, and sort of crypto is a bit all over the place. Some of these doing particularly well though. Euronext just continues to go up. European Central Bank cutting rates and more debt, so Euronext should do well. But yeah, let's have a look at some earnings. So we had Blackrock reporting their results. They seem to be of my portfolio, generally the one to go second. This is the only time you see Mr. Fink called Lawrence, as far as I can see. He seems to prefer Larry, but here it is. Gave his sort of little brief speech, sort of summary of the markets. Is basically, it's been a little bit rough at the moment. Tariffs are weighing on the market, and we have uncertainty and anxiety about the future of markets and the economy. But they think consistent growth going forward, basically. I suppose you would say that. Looking at the financial results, assets under management grew from 10.4 trillion to 11.58 trillion. Very nice. Quite a lot of net flows, 84 billion, but a huge amount of that is gain in the market. Looking at the long-term net flows by region, it is quite a bit coming from America, of course, and Europe, Middle East. Outflow out of Asia Pacific. Maybe they're sort of going for other providers, or just sort of a little bit of fear, maybe. We have a lot of ETF inflow, of course, 107 billion, 13 billion in retail, and institutions selling out from the looks of it. On the institutional side, on the index side at least, active were buying, but I guess these are all sort of fairly small numbers, and yeah, when BlackRock are basically just a toll booth for assets around the world, it's not so bad. Looking at revenue, of course, the increased assets under management helps revenue. 5.27 billion compared to 4.7 last year. This net income has taken a little bit of a knock because of the acquisitions that they have pushed through. It looks like gone through in Q1. They made a little bit of adjustments and done an adjusted net income. So sort of looking at straight GAAP net income, looking at 28.6%, it's a little bit lower than they're used to. Looking at their adjustments, which is sort of taking out acquisition related costs, amortization, and sort of a little bit of restructuring and that sort of thing. It's all temporary stuff, so they remove that from the numbers, and yeah, you'd be looking at 33.5%, which is sort of their, long-term average. I think the high end of their long-term average. So all looks very nice. Just thought it was interesting as well, looking at their breakdown of assets under management. You can kind of see why they started going into crypto, Bitcoin and Ethereum ETFs. You look, they've got 97 billion in currency and commodity assets and 50 billion in digital assets. So basically just Bitcoin and Ethereum is making up over half of their currency and commodity exposure, which seems a hell of a lot. And their sort of reasonable fee on it, higher than their sort of, S&P ETFs and that sort of thing. So yeah, it's certainly fast growing. March 2024, digital assets was 17, currency and commodities was 66. So yeah, I guess currency and commodities has grown 50%, but digital assets obviously 3x'd. So very, very nice. Similar to sort of liquid alternatives as barely risen. And, digital assets is well over half of liquid alternatives, which not everyone wants to be just 100% equity. You get a lot of people going for these multi-asset and bonds, obviously. I do wonder about the bonds, that 3 trillion in fixed income. A little bit of a worry. And noting that they are returning capital as they love to show, repurchased $375 million worth of shares. It seems to be a sort of fairly consistent amount. So I guess with price increasing over time from 2023, this will have less of an effect. You kind of need to increase that buyback to sort of keep the same rate. But they seem sort of happy with their outstanding shares over time. 151 million up to 156 with their acquisition. It was 149, so that seems fair enough. They raised the dividend to 521 this quarter. Should be noted, I guess, that's a very, very small increase. What we sort of just over 2%, so not exactly great. But yeah, if they're rather sort of putting that into acquisitions and they think those are accretive to the shareholder, then I would always rather that generally rather that they would do that than just pay it out as dividend. It's an interesting fee breakdown as well. So base fees up 17%. That makes up 81% of the total. So it's just clipping a percentage off the total assets. No real surprise that that's up year over year. Securities lending up 4%, slightly down on last quarter because the markets are down, I guess. Performance fees as well. They're not doing all that well in the active management, I guess, compared to last year. Last year was particularly good, so no real surprise there, but 71% down year on year performance fees, 87% down from Q4. Q4 again was a kind of a blowout quarter. Tech services and subscription revenue up 16%. That's pretty good. And then, distribution fees, advisory and other revenue, obviously very fairly small numbers. So I showed this before, lovely breakdown of BlackRock's assets under management. And basically I like the idea that currency debasement and money printing sort of increases assets over time, and BlackRock are just shaving a small amount off that, and I would expect that to do well, potentially outperform the market, because some of the S&P 500 is underperforming companies basically, and the ones that outperform increase the index, and BlackRock sort of clip a nice profit margin off the index. So pretty happy. So most of you'll know I'm very, very keen on silver, and we have confirmed numbers for 2024. It's not all that much different to the forecast numbers, to be fair, but looking good. Industrial demand reached a record 680 million ounces. Not sure why this sort of takes 3.5 months to come out really, but yeah, it's not too bad. So they give you a little brief summary here compared to 2023. Mine supply barely up, sort of 1.5%. Yeah, sort of 997 million ounces to just over a billion. That sort of mostly came from mine production, but it really isn't going up, and it certainly isn't going up enough to meet total demand. You had total industrial demand up, as they said, 23 million ounces to 680 million. A lot of that is photovoltaics, 197 million, not sort of increasing at a blistering pace that it has been, but if you look sort of compared to a few years ago, this is drastically up. So all good. Yeah, some of the other industrials sort of broadly the same. Photography coming slightly down, jewelry slightly up. Net coin and bar demand is down 54 million. So that has provided most of the demand loss, and a little bit of hedging. Demand is down from last year, but yeah, 1.164 billion ounces is still strongly above the total supply. So 2024, that brings us to, was that 150 million ounce deficit, and there really isn't that much above ground from what I understand. People are starting to sort of scramble for it a little bit. I think you've had 6 years really of deficit now. I can't remember, I think it's 5 years, and we're now in the 6th. So they're forecasting another deficit for this year. Yeah, outlook for silver in 2025. They're saying they expect demand to fall slightly to 1.15 billion from 1.164 billion. Still pretty high. They're starting to see sort of gains in the photovoltaic side, the solar side, sort of wane a little, but it's still pretty strong. Jewelry and silverware expected to weaken, but a recovery in coin and bar demand. They're expecting supply to increase again 1.5%. Not exactly anything to write home about. So as a result of that, falling demand, increasing supply, but it is still in deficit, and they're expecting 117 million ounce deficit. So at some point, you would think it will largely all be gone, or the above ground stocks will be gone, and we'll be sort of scrambling for what is coming out of the mines, or maybe there just is that much out there. People start sort of recycling and scrapping old cutlery and jewelry that they have. But at the moment, we're seeing reasonably good but volatile price action. So speaking of silver, just checking in on KGHM. We've got February and March numbers. Looks like February they were doing the planned maintenance again, so numbers are a little bit low. 51,000 tons of copper, down from 57.6 thousand. So yeah, that's a bit of a knock, and a big knock on silver. 74 tons rather. But yeah, they're saying this is largely down to planned maintenance. Looking at the March numbers, things are sort of somewhat back up to strength. 59,000 tons of copper, down from 61.7, but still looking relatively strong. The 3 months of 2025, so this is basically first quarter's production. 169,000 tons, down from 179 last year, but still pretty strong. And silver is up, despite sort of a couple of bad months. They had a decent month in January, if I recall. So yeah, 320 tons, up from 316. I think sort of annualizing this number though does only take them to about 41 million ounces, which I've sort of been liking the idea of 45, maybe a little bit more. We'll see how the rest of the year plays out. So looking at economic news, there was very little this week really. We sort of got some poor news from the UK Treasury. 16.44 billion deficit basically in March. I suppose it's good news for my portfolio, bad news for the country, which is a shame. We got not a lot of else on Wednesday. Thursday, jobless claims still coming down, looking pretty good. Last week's was revised down, and this week's 1.84 million seems to be in this range of 100 million jobs, or 100 million unemployment claims rather. So that was good. Initial claims at 222. Last week slightly revised up, but the impending recession doesn't appear to be here yet. These are obviously weekly numbers since we've had since Liberation Day. It's the only real strong news we've got since Liberation Day. So yeah, everything else is sort of Q1 numbers and all pre that dreaded day. GDP is sort of presumably slightly more confirmed now as we're in April. This is Q1 GDP minus 2.5%. So yeah, have to see if they get another negative quarter. Can't imagine they will. And got some fairly positive retail sales data, to be fair, for the UK. It's nice to see something looking up, 3.3% on core retail sales year on year. These aren't in real terms, as I understand. So if you've got CPI at sort of 3.3% roughly, then it's saying demand isn't really up. It's I guess broadly the same people buying the same goods for 3.3% more. It could be more in some sectors and less in others, but across the board it's basically increasing with inflation. But you're not getting a drop in demand because of inflation, I guess. So not too bad. And that was about it for the news. Portfolio wise, have been adding a little bit more, sort of trickling in some of this cash. Had 17,000 I think last week. This is the new ISA deposit, and I've put that into Hive and Iron. Increasing those positions a little. Still sort of nowhere near my CleanSpark and Riot platforms, even though I'm sort of somewhat more bullish on certainly Iron with their low cost of production, and Hive just on a sort of relative valuation really to the others if Bitcoin is going to do well. But yeah, hopefully we can sort of see a nice move in, or a nice continued move in Bitcoin. It is certainly up, and the miners have been responding a little. We sort of had CleanSpark at $7 I think just a week or so ago, back up to 9. Riot platforms doing okay. Hive Digital I think was 130 not so long ago, so 179, very nice, and sort of Iron in the low 5s I think. So yeah, things are looking up slightly. Gold and silver sort of coming off a little bit, but not too much. Equinox sort of 670, that's okay for me. On the Interactive Broker side, very, very little change in anything. Pan American was sort of in the 27s at all-time high gold. So, yeah, that's not, it's come down slightly. KGHM looking up, though. That was sort of in the 110s, in the low 110s. So, copper doing well and silver sort of doing okay. It's liking it. And on the option side, it's taken a drop certainly from last week, mostly off the back of gold and silver sort of not doing quite so well. I have made a rather drastic change. I sold all of my Equinox this coming January 2026 options, partly because they were at a $10 strike, and Equinox is still sort of hovering around a bit below 7, a bit above 7, and sort of a little bit of lack of confidence that it can go significantly above 10 in the next sort of few months, and then as it sort of gets closer and closer to expiry date, they start rapidly drifting towards 0. So with Equinox potentially having a much better 2026 to 2025 with their merger, I kind of wanted to give myself a little bit more time, basically. So I sold all of the January 2026 options and rebought January 2027. So sort of took a little bit of a hit to give myself more time, basically. So this is now 455 contracts, all on one holding, January 2027, and those are at $12.50 strike. So a little bit higher price, but hopefully in the next sort of year and 9 months, I think it can do significantly better than that. Coeur mining sort of down a little bit with gold and silver, of course. The crypto miners, though, slightly looking up. I have been buying a little bit more. Hive, sort of again January, this coming January, but at the sort of $3 and $4 strikes rather than the sort of $10 that I had originally. I still think it has potential to go above $10, in a real sort of breakout bull market, but I wanted to give myself a little bit more safety as such. Himax sort of is basically flat, and then Riot and Iron, CleanSpark has gone green, 16p. But yeah, Riot and Iron sort of come up a little, still obviously looking well in the red, and could do with a healthy crypto bull market from the looks of it. Certainly with these three, but I think we can get there. So 10,000 in cash still, potentially looking to deploy it if we get a little bit of a drop, because I still think we can do well. So yeah, leave your thoughts in comments below, and like and subscribe. See you soon.